Hello, in this video, I will teach you about the unbalanced volume indicator strategy for day trading stocks, cryptocurrency or forex. So stick around till the end of the video to understand the strategy. Unbalanced volume, also called OBV, is a cumulative measure of buying and selling pressure that subtracts volume on down days and add volume on up days. Joe Granville developed unbalanced volume, which was one of the first indicators to measure positive and negative volume flow. People frequently use unbalanced volume to confirm price trends and to look for divergence between price and the OBV. If today's closing price is higher than yesterday's closing price, yesterday's volume should be added to today's volume, and the total volume should be referred to as today's unbalanced volume. If today's closing price is lower than yesterday's, subtract yesterday's volume from today's volume, and the net total is today's unbalanced volume. However, if today's close is the same as yesterday's close, then yesterday's volume should not be touched, and whatever OBV we had yesterday will remain unchanged for today. With this indicator, we are not concerned with the absolute value of daily unbalanced volume, but rather with the overall direction of the OBV line. The OBV indicator line is simply a running total of positive and negative volume. To summarize this, if the closing price is above the prior close price, then current OBV is equals to previous OBV plus current volume. Secondly, if the closing price is below the prior close price, then current OBV is equals to previous OBV minus the current volume. Thirdly, if the closing price equals the prior close price, then current OBV is equals to previous OBV, so there's no any change. Before we know how to use the OBV indicator, there are some key points to note. During an uptrend, unbalanced volume will move in the same direction as the price and will continue to make higher tops and lower bottoms. As a result, both the price chart and the OBV chart will appear nearly identical. The trend is said to be perfectly up as long as both charts move in the same direction, indicating that volume is supporting the price rise. During a downtrend, on the other hand, OBV should make a lower top and a lower bottom in the same style as price, confirming that volume is supporting the downtrend and it's perfectly intact. So let's check on the different ways to use this indicator. First, you can use this indicator for non-confirmation of an uptrend in the market. To explain this to you for a better understanding, price will make a new higher top, but unbalanced volume will fail to make a new higher top. When you notice this in an uptrend, this is the first sign of trouble. It demonstrates that while the price is rising and reaching a higher high, volume is failing to keep pace. It indicates that increase in price has not been accompanied by an increase in volume. This is referred to as non-confirmation, and such non-confirmation can and do occur in many cases at the end of an uptrend. Let's go to our chart to see an example. This is a Tesla stock on daily time frame. We can see the market was in an uptrend initially, then it made a higher top at this area. When we check on our OBV indicator, it failed to make a new higher top, hence indicating that volume is decreasing. So you need to look for short options, or if you had taken a long position from this area, you need to close your orders and take your profit. The second way you can use this indicator is for a non-confirmation of a downtrend, and it's simply the opposite of the non-confirmation of an uptrend. During a downtrend, both price and volume are expected to fall in the same direction. In other words, lower top and lower bottom. At times, we will notice that volume and price are not moving in a lockstep, and you find price has broken the previous bottom, but volume has not. It demonstrates that price has broken with a lower volume. This is a critical moment in the downtrend market because volume is no longer supporting the price decline. This is known as non-confirmation and mostly occurs at the end of a bearish market. To see an example, we can use this same Tesla stock daily time frame chart. We can see the market was in a downtrend initially, then it made a lower low at this area. When we check on our OBV indicator, it failed to make a new lower low, hence indicating that volume is increasing. So you need to look for long options, or if you had taken a short position from this area, you need to close your orders and take your profit. The third way to use the OBV indicator is to check on advanced breakout. To elaborate this concept, as long as price and volume continue to rise together, there appears to be no problem. But there will come a time when price cannot breach the previous top, but the OBV line has. This is known as advanced breakout. It demonstrates that despite a marginal increase in price, volume generation is so high that OBV has made an advanced breakout. This is a signal that price will also cross the previous high. So up to this level, we can now conclude that non-confirmation is a sign of weakness, whereas advanced breakout is a sign of strength. To illustrate this on our chart, we can observe that the market was ranging in this area, and it's correlated with the OBV indicator below. Later, the OBV indicator broke the previous high earlier before the market could break, hence giving us an advanced breakout. The other way of using the OBV indicator in your trading strategy is to predict an advanced breakdown. Price and on-balance volume are expected to move in the same direction during a downtrend, with lower tops and lower bottoms. However, on occasion, price will fail to break the previous bottom, whereas the on-balance volume indicator will. This is known as advanced breakdown. An advanced breakdown indicates that price will also break the bottom, and this is a matter of weakness on the part of the price. To illustrate this on our chart, we can observe that the market was ranging in this area, and it's correlated with the OBV indicator below. Later, the OBV indicator broke the range earlier before the market could break the previous low, hence giving us an advanced breakdown. When everything is in balance because volume and price both move in the same direction, regardless of the trend, we can draw a trend line on both price and volume to look for pattern similarities to find some trading opportunities. Furthermore, OBV should always be used in the daily chart in correlation with the closing chart. To make better trades, we'll combine the OBV with other indicators, and in this case, we'll take the stochastic for better confirmation. Let's take an example to understand it better. You can confirm the advanced breakout with that of positive divergence on the stochastic indicator for us to take a long position. Like on this chart, we have added our stochastic indicator as shown below. You can observe that the price was going down while the stochastic was going up, creating a positive divergence. This, in conjunction with the advanced breakout of the OBV indicator, gives us an opportunity to go long, and we can target a 1 to 2 risk to reward ratio, putting our stop loss just below the last swing low point. To take a short position, we need to combine an confirmation of an uptrend together with the negative divergence of the stochastic indicator. Like on this chart, you can observe that price was going up while the stochastic was going down, creating a negative divergence. This, in conjunction with non-uptrend confirmation of the OBV indicator, gives us an opportunity to go short, targeting a 1 to 2 risk to reward ratio, putting our stop loss just above the last swing high point. Watch my next video on time segmented volume indicator trading strategy that top traders use to get more profitable in your trading journey. If this video has been helpful, remember to like, share and subscribe to the channel for more future content like this. Till next time, see you.